Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is the Forex chart of gold USD in front of us, and as you can see, that gold is standing at 1817 right now. Yesterday, our analysis worked perfectly, and we saw market reversing from the resistance here. Before I proceed, I would like to thank each and every one of you for all the love and support, because I really never imagined in my life that I'll receive so much love and support from you guys. Thanks a lot. Okay. So uh, before getting more emotional, okay, let's get started. First of all, let's talk about DXY. So DXY, to be honest, I was not expecting DXY to come down so sharply. Okay, but yes, DXY came down for retracement and took support at the previous high. So the previous resistance here is right now acting as support. But the problem is that for more than 12 hours, market is trying to take support around this area, but we can clearly see that market does not have the strength right now. Okay, market is struggling to take support. So wait and watch. Let's observe whether market bounces or not, whether market succeeds or not. In case market fails to bounce from this particular level here, the next support on the chart of DXY will be 104.40 to 104.30. This is the next support on the chart of DXY. If DXY breaks this particular level here, why we're considering 104.40 and 104.30? Because of the blue line here. What is the blue line? The blue line is the 50 moving average, and along with that, if we draw Fibonacci, you can see we have a beautiful combination of Fibonacci and 50 moving average around this area. So in case DXY falls, in this market situation, when we do not have any big news, big event coming up, we can definitely expect the market to take support around this area. Okay, so this is all about DXY. Now gold price is flat amid mixed outlook. Yes, the world is not sure in which direction the gold will be moving right now. To be honest, I am also not good with predicting the market for long term, but yes, I'm good with levels, so I prefer to trade from level to level only. Okay. yesterday I took a sell position on all JPY and my SL was hit. But yes, the gold trade did well. So on the 4 hours time frame, we do not have much opportunities right now, because we can clearly see after reversing from the yesterday's level. Okay, we got an opportunity yesterday. Okay, that opportunity is gone right now. You can clearly see market is standing at the yesterday's resistance, so it's better to avoid any position in the market right now in this level. Okay, so on the 4 hours time frame, we do not have much opportunities, or at least I don't see much opportunities on the chart. If I have missed anything, please write down in the comment section. I would love to learn from you. But if we move to the 1 hour time frame, then we can see that the 200 moving average, the red line is coming down. So what is the level here? The level will be around 1830 to 1828. So around 1830, 1828, we have the presence of the 200 moving average, which is the dynamic resistance for the market. And along with that, you can also see around this area we also have previous support. Okay, we also have previous support. So previous support will also be acting as a resistance right now. So in this zone, we can expect the market to face some selling pressure. So if market goes up, right now gold is standing at 1816 right now. But as I have already mentioned, that this level here is not much reliable right now. Yesterday we got the opportunity, we made some money, that level is gone, that opportunity is gone. But today you should avoid, at least I will avoid any position in this level right now. So if market goes up during the European session, US session, observe the market. Once market hits 1828 to 1830 level, observe the market. If you see, market is showing price rejection from above. If you see market is struggling around this area, it's a confirmation that you can go for a sell. You can expect a profit of 50 to 60 pips. Okay, in case market shows extreme volatility, okay, in case market shows extreme volatility, then obviously use your common sense and you need to avoid, because trading common sense goes side by side. And your next resistance will be around 1844 level. Why 1844? Because of strong price rejection around this area in the past, as well as we have Fibonacci 23.6% retracement level around this area. So the two resistance levels for the day are 1828 to 1830, because of the 200 moving average on the 1 hour time frame, as well as previous support to act as resistance. And in case market breaks this level, then we have resistance around 1844 level, because of previous price rejection around this area for resistance, as well as we also have Fibonacci 23.6% retracement level. So these are the two resistances on the chart of gold USD that we can trust today. And if you're wondering about support level, then to be honest, we do not have any immediate support on the chart of gold right now. The only strong support on the chart of gold is around 1788 to 85 that we have discussed in our previous videos as well. But for day traders, okay, for day traders, you can observe the market around this particular level. Sorry, okay, you can observe the market around this particular level here, which is 1807 to 186, 1807 to 1806. But one thing you need to understand, that the market is bearish. We have already discussed about the structure of the market in our previous videos. In fact, yesterday also we talked about the structure of the market is like this. Market is constantly forming lower highs and lower lows. So whenever you see a market structure like this, taking a buy position at support is very risky. Okay, taking a buy position support is very risky. In case there is a very strong support, you should always avoid taking some buy position in this type of levels. But if the volatility of the market is low, okay, see, for any breakout, okay, for any breakout or breakdown, market needs volume, market needs pressure. So to break this level here, okay, market obviously requires selling pressure. Okay, so in case the selling pressure is missing, okay, in case the selling pressure is missing, then market fails sometimes. Okay, so volatility plays a big role here. So if you see market is coming down, okay, listen to me carefully. If you see market is coming down, but the volatility of the market is not very high, volatility of the market is low, in that case you can expect the market to bounce. At least you can expect a bounce of 30-40 pips. But if you see market is coming down with big red candles, then obviously you should avoid, because the structure of the market is lower highs and lower lows. So if you are planning to take a buy at support, then yes, observing the volatility of the market will be very, very crucial. Anyways, whatever you do, please follow proper risk management. This is my analysis. I can be wrong as well, because I'm also a trader like you, maybe a bit more experienced, but nobody is 100% accurate. Okay, so be careful. Do not gamble with your hard-earned money. Capital protection should be your first priority always. Bye bye, take care.